Good afternoon, friends. Today I have an update for a company called uh, Transformer and Rectifiers India Limited. It is an company that has given a 93% net profit CAGR over the last 5 years. So this is an important stock for you to keep a track of. The Indian transformer sector is rapidly expanding, driven by the rising energy demand, renewable integration, and infrastructure modernization. The market size reached $2.44 billion in 2024 and is projected to grow at about 8%, reaching about 5.1 billion in 2033. The market capitalization is 15,900 crores. Of the company opened at 552 and increased about 0.74% and closed. Sorry, the previous closing price was 548. The company's consolidated net profit has grown from 8 crores to 260 crores within the last 4 years. It has achieved an impressive net profit CAGR 93%, strong financial performance and effective growth strategy driving consistent profitability across its business operations. Financial highlights reported Q4 FY25 revenue increased by 21% Q on Q basis from 559 crores to 676 crores, that is between Q3 FY25 and Q4 FY25. Further, the revenue zoomed by 32% year-on-year from 512 crores in Q4 FY24 to 676 crores in Q4 FY25. The company's net profit increased by 70% on a quarter-to-quarter basis from 55 crores in Q3 FY25 to 94 crores, which is Q4 FY25. Further, the net profit magnified significantly uh, by 129% year-on-year basis sorry from 41 crores in Q4 FY24 to 94 crores in Q4 FY25. The company has posted a strong performance with revenue surging 56% from 1294 crores to 2019 crores. So the acquisition, okay, 1407 crore acquisition, uh, okay, as of the company reported an order book of 5,132 crores, Q4 order inflow 2,144 crores, and FY25 order inflows about 4,500 crores. Additionally, inquiries under negotiation exceed rupees 22,000 crores. New development. The company will begin phase one of its 15,000 megawatt capacity addition in 2025, targeting $1 billion in revenue in the next 3 years, with further 22,000 megawatts EHV transformer expansion by Feb 2026, total capacity to exceed 75,000 MVA, a capex of 550 crores, and a full backward integration planned as per Q1 27. Transformers and rectifiers driven by strong growth, strong relationship with diverse domestic customer base. Clients include Power Grid, NTPC, Adani, JSW, Tata Power, Siemens Energy, Renew Power, Sial, Hindustan Zinc, reflecting the company's true presence across power, steel, infrastructure, and renewable energy sectors in India. Market position: the management is optimistic about growth in the Indian energy sector driven by infrastructure development opportunities. The company will adopt a selective approach. Company profile, this you can go through later. Yeah, so the views expressed are the are by the investment experts, broking houses, rating agencies on the internet or of their own, and this is not my personal opinion. Investing in equities poses significant financial risk and loss. Investors must therefore exercise due caution with investing or trading in stocks. The author is not liable for any Losses caused as a result of the decision based on this article. Please consult an investment advisor before investing. So, some other important information that you can have a look at. This is the price. It has corrected 3% after this news was circulated in the market. You can see overall 2% growth in the last 5 days, 20% growth value growth in the last 1 month, which is a very good return. Then over the last 6 months, you can see 31% growth in value, price value. So you can see this company is doing very well. The negative factors that affected the entire market has not touched this company by any means. So definitely the sentiment of this company is very good, and the people are happy with the overall performance that can reflect and show from the performance by the company the last few quarters, and specifically year on year in the last 1 year. Then 45% value addition in the last 1 year. Then the company's ownership strength is slightly missing the benchmark. The stock is at a premium valuation at this point. The company seems highly inefficient in case of asset management. So the company has opportunity to improve its utilization of the assets. The company possesses stable growth history and manageable debt. So company is able to manage its debt well, and there is a good opportunity of growth, and the company is able to make use of that opportunity. So debt is 250 crores, cash of 25 crores, promoter holding 64%. EPS, earnings per share, TTM last 12 months is 6 rupees and 25 paise. Return on equity is about 9%. Sales growth has been a negative 7.4 in the last 1 year. Book value is 40 rupees. So you can see the company is trading at about 13-14 times its book value, 13 times specifically face value of the shares 1, price to earnings ratio of 85. Then these are the peer comparisons. You have Hitachi Energy, Waaree Energies, G Vernova. You can see most of the companies range from about 15,000 crores to about an average of around 30. There are two companies which exceed 50,000 crore capacity, and two companies which are below the 10,000 crore market cap. Then you can see price to book and price to earnings ratio. So APAR Industries 25, which seems to be something that you can look into. Hitachi Energy 187, a very high price to earnings ratio. Then G Vernova 75, again pretty high. Inox went very high, 218. V-Guards Industries 58. Schneider Electric Infrastructure 67. Janus Power Infrastructure 45. So most of the companies have a very high price to earnings ratio. Then you can look at return on capital. Waaree Energy is 47%. I think that is the highest overall, followed by Voltam Transformers 32. Then Shinna Electric Infrastructure 39, Apar Industries 46.5, then GE Vernova 24. So there is a good scope in this segment. That is something that you can further analyze, and also consult a financial stockbroker for their expert advice. Then promoter holding 64%, out of which 21% has been pledged. So a little bit of a concern. FI is 11%, DII is 7%, so public 17%. So again, that 21% that is pledged, if the owners have to sell that stake, that will open the market to a volatile situation if that 21% stake is not picked up either by the DIIs or FIs. So overall, if any one of them pick up the stock, if it is sold in the market, then it can create some volatility in the market. However, with the sector growth possibility, that seems highly unlikely that the owners may allow their shares to be sold in the market. The company has shown a good profit growth of 80% in the last 3 years, good revenue growth of 20% in the past 3 years. Company has a good cash flow management of 1.56. The company has a poor ROE 7.64, high PE 84.8. Company is trading at a high EBITDA of 50.48. Then dividend history 20%, 15%. Then 15, 10. So you can see once a year the company offers some dividend. You can see from this Madhusan Kela seems to have sold off his part of investment, being one of the super investors in the company. And this is the overall sequence as of March 2024. It's showing a promoter holding of 69. So this has changed and come down to 64.8, so almost 4-5% sale by the promoters apart from the 21% that has been pledged. Transformers and Rectifiers, manufacturer of power, furnace and rectifiers, transformers. So company is leading manufacturer of transformers and reactors. Portfolio include single phase power transformers up to 500 MVA and 100 kVA class furnace and transformers. Geographical split: domestic 92%, exports 8%. Power grid: NTPC, Tata Power, Torrent Power, Siemens Energy, Blue Star, Hindustan Zinc, GSW, Getco, etc. are the major clients. As of 9 months FY25, the company has a total order book of 3,686 crores. It has orders worth 19,000 crores under negotiation. So those figures have slightly been corrected on the upward side. As we went through earlier, manufacturing capabilities: company's second largest transformer manufacturer by capacity, operating 3 plants in Ahmedabad, Gujarat with a combined capacity of 40,000 MVA. So power transformers, reactors, special duty transformers. Okay, we've been through most of this. Material cost: it is also entered into a supply agreement for the mother coil and technology agreement for 3 critical components, expected to be operational by Q4 FY26. High price of 650, book value 41.7. ROC here it shows 28%. We'll have to check that. This seems to be an updated version of the previous year's results, so the ROCE has improved based on the current year's performance. Then you can look at debtor days have improved from 142 to 85. Company's working capitals have reduced from 140 to 113. The company has delivered good profit growth of 251%. Then you can compare ABB, Siemens, CG Power and Industries, Bell, Suzlon Energy, Vari Energies, Hitachi Energy, Trial. These are the other companies that are available as a peer comparison in the industry. So Trial is basically Transformers and Rectifiers India Limited. Then this is the ROC. You can see most of the companies are delivering ROC above 20%, so which is very good compared to the industrial average. Apart from BHEL, BEL, all the other companies are performing and giving a good return. Sales, you can see growing trend, growing upward month on month. Profit is also grown month on month, so that is the reason why the company hasn't had any drop. The company financial results have been very good. You can see the sales year on year. You can see a big improvement in the last 1 year, so that is one of the reasons why the stock is on a bullish trend. This is another set of figures that you can keep at profit growth. last 12 months 379%. So compared to ROE of the previous years, which shows about 8 to 13%, in the last 1 year 23%. So reserves and doubled, more than doubled in the last 1 year, which is an amazing sign, which is a very good sign based on the performance of the company. Debtor days have reduced, amazing, nearly half of the time. Days payable have slightly gone up. However, working capital requirements have reduced based on the improvement in the way the company is able to convert its the accounts receivable. So with the debtor days reducing, the overall working capital has also improved. So friends, thank you for watching. Thanks for your valuable input and comments. Please share this video with your friends, family and associates, those who would tend to benefit from this information. Thank you. We'll catch up with another video very soon.